This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Germany took control of a major Russian-owned oil refinery on Friday, risking retaliation from Moscow as Berlin strives to shore up energy supplies and meet its European Union commitment to eliminate Russian oil imports by the end of the year. The Economy Ministry said it was putting a unit of Russian oil firm Rosneft under the trusteeship of the industry regulator and taking over the business Schwedt refinery, which supplies 90% of Berlin's fuel. This is a far-reaching energy policy decision to protect our country, Chancellor Olaf Scholz told a news conference to present the government's plans to put the Schwedt refinery under the control of the Federal Network Agency regulator.
Oil prices rose slightly on Friday as a spill at Iraq's Basra terminal appeared likely to constrain crude supply, but remained down on the week on fears that hefty interest rate increases will curb global economic growth and demand for fuel. Brent crude futures settled at $91.35 a barrel, up 51 cents, while U.S. West Texas Intermediate, WTI, crude futures settled at $85.11 a barrel, up 1 cent. Both benchmarks were down by nearly 2% on the week, hurt partly by the U.S. dollar's strong run, which makes oil more expensive for buyers using other currencies. The dollar index was largely flat on the day equals USD but up for its fourth week in 5 weeks.
Moving on to the top news in the energy sector.
European Union countries must act together to address the acute energy crunch driven by soaring prices, from cutting electricity consumption to jointly buying gas, European Council President Charles Michel said on Friday. Michel will chair talks of the 27 national EU leaders twice in October on the crisis, caused by rocketing gas prices and reduced supplies from Russia as it wages war against Ukraine. The EU executive has proposed raising more than €140 billion, to shield consumers from soaring prices by skimming off revenues from low-cost electricity generators and making fossil fuel firms share windfall profits.
Saudi Arabia and Russia, the de facto leaders of the OPEC Plus oil producer group, see $100 a barrel as a fair price that the global economy can absorb, sources familiar with government thinking in the two countries told Reuters. The Organization of the Petroleum Exporting Countries, Russia and other allies, known as OPEC Plus, pumps more than 40% of the 100 million barrels per day of global output. The group has a powerful influence on global fuel prices through its supply policy. OPEC Plus does not explicitly state its preferred price level. Top officials in both Saudi Arabia and Russia have said in recent weeks that the group's policy focus is to ensure that global oil supply matches demand, not defend a certain price.
Next, we have the top news in metal markets.
Copper prices rose on Friday but were still on track for a weekly fall as investors worried about slowing economic growth and China's yuan weakened, making dollar-priced metals costlier for buyers in the world's biggest commodities market. Benchmark copper on the London Metal Exchange (LME) was up 0.6% at $7,772.50 a ton at 16:01 GMT but down about 1.1% this week. Prices of the metal used in the power and construction industries have tumbled 30% from a peak in March but have held around $7,500 to $8,000 since July.
Dalian and Singapore iron ore futures fell on Friday after data showed China's property sector contracted further in August, with a seasonal demand boost usually seen beginning September not yet in sight. Property investment last month in the world's top steel producer fell at the fastest pace since December 2021, according to Reuters calculations based on official data. New home prices fell 1.3% year-on-year, the fastest pace since August 2015. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 1.2% lower at 715 yuan, $101.89, a ton. We will now look at the top news in the agricultural sector. Chicago Board of Trade soybean futures stumbled on Friday as rising crop sales in Argentina and warnings of a recession raised concerns about global demand for U.S. supplies, analysts said. Corn futures ended little changed, while wheat futures advanced. Traders focused on demand for crops, after the U.S. Department of Agriculture updated its domestic production estimates in a monthly report issued on Monday. While we've answered a lot of the supply-side questions, now we have a ton of demand-side questions, said Ted Seiferid, Chief Market Strategist of Zaner Ag.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.